Yo, 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 how you doing? How you doing? Welcome back to the channel. Um, I'm your host, Jay Reed, and this is the Reed Report. We're gonna get right into the market today. Lot of stuff going on in the news. So I wanna, try to get this done as quick as possible so I don't take up too much of your time. But we're gonna break down today's or yesterday's, I guess, big market moves, and just a quick rundown. Nasdaq crashed like 1.2%. The S&P 500 third straight loss. The Dow's holding steady. Those are your old staple stocks. We're gonna get into what's driving this volatility. Let's talk tech earnings and economic data. Let's go. All right, so I guess first up, um, in the news, we'll get right into the news. Um, Nasdaq erases all of 2025 gains, so that puts tech stocks under pressure. So as you can see, the Nasdaq 500 slides as tech stocks lag after Trump backs tariff plans. So the U.S. stock sold off in the close on Monday as investors weighed the prospects of Donald Trump's tariff policy and also shift focus to this week's Nvidia earnings. So the Dow, like we talked about, was little changed. It didn't change a lot. Um, and the S&P fell like 0.5%, which is a lot. So but the tech heavy Nasdaq, which is where all of your tech stocks are, fell like 1.2%. So stocks comeback attempt fizzled. Because we were hoping that they were going to come back after Friday sell off on Monday, but that didn't materialize. So we'll continue, like I said, to monitor the Nasdaq more closely because that's where a lot of the tech stocks lie. And then like we were saying, get into Nvidia's earnings call. And this article talks about, will that make or break the AI boom or run that we've had. So this article says, as Nvidia prepares to release its highly anticipated fourth quarter earnings report for 2024, investors and tech enthusiasts are paying close attention to the global leader in graphics processors and pioneer in the AI domain. Expectations for the fourth quarter ending February 26th indicate revenue of 410 billion, slightly below the consensus. So like I was talking about yesterday, um, they're not coming in where expected. So you know, that's a significant slowdown in revenue, and you can tie that to similar results from the Taiwan semiconductors. So Nvidia's earning report not only reflects its own performance, but also serves as a barometer for the like I talked about, for the health of the whole AI industry. Um, so analysts are cautioning that should Nvidia's performance or guidance fall to meet expectations, which it looks, all indicators show that's what's going to happen. um you know um it could lead to a widespread turbulence, so which is which is unfortunate because it's been a good run, and hopefully it continues. But I wouldn't bet with it. So like we said, the Nasdaq stock market news on the 24th, the Nasdaq falls more than 1%. So and you can see the Dow kind of staying above that. The Nasdaq's down here, so that's a the Nasdaq composite dropped on Monday. Like you talk about with tech stock, tech heavy index, yada yada yada. S&P finished trading hours after President Trump said in a press conference that tariffs on Canada and Mexico were set to move forward um, on schedule next week. So, if you're in that industry, I'm in the import export industry, so we're preparing and gearing up as though these are going to go into place, and all indicators seems to indicate that they are. So that's unfortunate as well. So so what do you do? Like, what do how do you hedge against this? So Bank of America warns defensive stocks in the U.S. Market turning over indicate that the U.S. economy may not enjoy good times for long. So, you have these. It's the I guess consumer staples and healthcare is always a good defensive stock in bad times. And like I said, Bank of America warns that consumer staples and healthcare stocks have recently outperformed other sectors, suggesting that the U.S. economy may face challenges. The S&P 500, like we talked about, fell almost a 0.5%, a little over 0.5%, while consumer and healthcare stocks have risen 6.8% and 2.6% respectively. So consumer 6.8 and healthcare 2.6. The Bank of America strategist, that's Michael Harnett, point out that signs of a slowdown in economic activity could lead to a disruption in the stock market bull run. So, there are a lot of indicators that say this bull run is over. I'm not a doomsday guy or to say everything's all is lost, but I'm saying you want to definitely protect any gains or minimize any losses that you have right now, because it's as you can see, and the risk of a slowdown in the U.S. economy is greater than the risk of rising inflation. So you got inflation and a slowdown. That doesn't usually paint to good signs. Um, and we talked about what's driving this sell off. Is Nvidia. We go back to the 27th, when DeepSeek hit the market. Like I called it a deep seeking missile, and boom, it blew up or whatever. If you weren't paying attention, then the U.S. stock closed sharply lower on that Monday, with Nasdaq suffering its biggest decline of the year. Nvidia shares falling the most since 2020. So they lost, I want to say, a $500 billion or something like that in market cap. So you go back and look at that. So history, not history, but Chipwreck, the Philadelphia Semiconductor Index in market tech and chip. I'm sorry, is the market's tech and chip section benchmark is on pace for the worst day. So that this is continuing to drive the slowdowns as well as the market declines that we've seen since then. Now it rebounded, but it's on a clear downtrend. And if you go to like some economic data to support that, this is the World Economic Outlook, and they also point to they said global growth is projected, and this is the 2000 January 17th 2025 release. It says global growth is projected at 3.3% both in 2025 and 26, broadly unchanged from the outlook in 2024. The WEO forecast that was released in October 2024, with an upward revision in the United States offsetting downward revisions elsewhere. So there was a little bit of an uptick projected. There is a little bit of an uptick projected for the U.S., but the near term outlook is characterized by divergent paths. While medium term risks to growth are titled to the downside, renewed inflationary pressures could interrupt the monetary policy pivot, which with implications for fiscal sustainability and financial stability. The policy mix should balance trade-offs and rebuild buffers. I think the key line is renewed inflationary pressure could interrupt monetary policy pivots, with implications for fiscal stability and financial stability. So renewed inflationary is a bad term. It leads to sell-offs. So and it changes investor sentiment. So you can see here, a lot of people are risk adverse. People don't want to carry on risk. So risk aversion is a tendency to avoid risk. This term, risk aversion, describes an investor who chooses to chooses the preservation of capital over the potential for a higher than average return. So smart investors are risk averse because they know the market can turn on a dime, even though it's everybody wants it to go up. Um, that doesn't necessarily happen because you have the big guys that are risk adverse and they don't want to. They're going to make money regardless. So they don't want to lose the gains or lose a lot of money just based on speculation. So that we can really say that just from all indicators in this market, consumer sentiment has changed. Um, so we'll continue to watch that, and I think that's going to be big. We have some earnings coming out this week that'll give us some indicators. You got Home Depot and Lowe's. Home Depot on Tuesday with today, and Lowe's tomorrow. So that's going to give us insight into consumer spending and housing trends. It's going to be important. Tech earnings, and market impact. We already know Nvidia is coming out. Everybody's watching that. Will it be a make or break moment for the market? And like I said, you want to have a good investment strategy. And just some of the strategies. 10 reasons to sell a losing position. You may need to protect your initial investment. Um, Preserving capital is crucial for some, especially those needing the funds within the short term. And selling losing positions can prevent further loss. Managing risk, exiting losing positions helps to limit exposure to increasing and to increasing risk and maintains the desired risk profile for traders. So, you gotta have risk management in your portfolio. Um, Market conditions have changed. Like, when market conditions change, just like if you're in a club and you're normally there till one, and it's all good, and then after one things start changing. The crowd looks different. It's probably time to get out of there. So shifts in the broad market or specific industries can lead you to sell a position unlikely to recover in a new environment. Sticking to your game plan. If losing positions no longer fit your overall profile, you got to get rid of them. Don't be stubborn and think you can will something up. It just doesn't work that way. Fundamental analysis. When the underlying fundamentals of an investment worsen, it's a sign that the original reason for buying it is no longer valid. So, you may do your fundamentals and everything worked out, but it's a new environment. So you got to throw that out the window. Technical analysis. Technical indicators often help determine when to buy an asset and when to cut your losses. So you have your fundamentals, but you gotta pay attention to the conditions and more. I'm a technical trader. I also look at the fundamentals, but I'm more so a technical trader, and I look at the environment. Um, and To pay less in taxes, selling a losing position can help offset gains. So it's not always a bad thing to sell a loser because that's going to offset the gains that you will make. Um, you know, when it's times to pay taxes. And these last few, recognizing and overcoming your own mental blind spots. When you might recognize and overcome cognitive biases like the endowment effect or sunk cost fallacy that keeps you in a losing position. Like you research those, but basically it's saying like you're just holding on this, man, I don't want to lose this, but you're already losing. And sure, you can easily sell when needed. If the position becomes increasingly illiquid or you need the capital, selling the position now can help you avoid the liquidity situations worsening over time. So and that's kind of self-explanatory. And you found something better. I mean, holding on to a losing position while avoiding reallocating capital is more profit to more profitable opportunities means falling prey to opportunity cost. Again, going to that opportunity cost bias or sunk cost fallacy. If you got something better, don't take this as a relationship advice, but if you see something better over there, you got to get rid of what you have or just reallocate. Spend more time over here. So and just look for new opportunities in the market. And just all you have to always kind of refine your thoughts because usually what you're thinking is only good or valid in these conditions, but once conditions change, you got like the current market, you have to reevaluate your portfolio, just to maintain and continue the growth of that. So we'll take a look at our portfolio, and let's see here. The main guy I'm watching, we all know is Palantir. Palantir, it's up. I checked it earlier this morning and it was at 88, and my heart kind of sunk a little bit, because as we mentioned yesterday, the only real support for this is at 95. Um, After then, you fall to a ceiling here, 85, and support of 78. We don't want to get there. So it is trending on the downside. I see a clear VWAP forming, and it's broken through the top end and came down to the bottom, and it's still still may be trading on the downside, but it is up 90 to 92.41 pre-market. So I won't say that's life, but that's I won't say that indicates life, indicates there's been more life injected into the stock, but um it may be a good position to get out. um let's see, let's take a look at what we got. Archer, we'll just go down the line. Archer's holding steady pre-market. Talk is down. Probably should have took profit when it was up here, up to 420, 423, just to maintain, especially when it broke the 200 EMA. But we're gonna hold steady for now. Right now, pre-market, it is down more. Color, something that probably looking at cutting losses. I talked about it yesterday. It's continuing to slide pre-market towards that dollar mark. Misty, same thing. Crypto hasn't been performing that well. Actually, this is a ETF on MSTR, so which is all crypto. So crypto's still down a little bit. So that's just probably something to hold. Maybe buy the dip on that. It has dipped a little bit more pre-market. Rigetti's also down pre-market. SoFi, like I said, SoFi has been hovering in this $14 to $17 range, a little lower than the support level here at 14.36. So definitely monitor that. Sound, SoundHound AI, they are also down pre-market. They have earnings coming out. We'll see. They're projected to lose money, so if they can show some signs that they're moving towards profitability, that will help them. Tesla's maintaining right here, got some support at 324, so that's a good thing. We already talked about Palantir. The Tesla ETF is also down pre-market, but that's kind of moving along with Tesla. Nvidia is up a little bit pre-market, so those are, I won't say those are good signs, but it's encouraging that Nvidia and Palantir are up pre-market. Like I said, when I checked them earlier today, they were down. Walmart may have gained some stability here. I don't see much support in the short term. Actually, there's a little bit of support here, maybe even down to 90. So we'll continue to monitor Walmart and see how that does. Microsoft is down as well pre-market, and they're kind of moving. But we talked about yesterday how they're cutting leases on data centers. So we'll have to see how that plays out. I mean, it could mean less revenue, but it also could mean that they're going to be more efficient with what they have and create and increase profitability. So we'll continue to monitor that. Vu's also up pre-market as well. They took a little slide yesterday after open. So they were down 0.2%, almost 0.3%. So we'll see if they rebound. I know they're heavily diversified, so they usually have these ebbs and flows. Meta's fallen under 700. To me, this is a good buying opportunity. But again, you may want to wait till a full retracement or to the downside would be 200 and I'm sorry, 623. I'm not saying it's going to get that low, but it could. Centus has been really stable for us. Even with the pullback, it's still in a good range. Maybe to buy the dip on that. And Schwab has is up pre-market, so they have they're at the ceiling here of 28.45. So they're at 28.35. If they can break through this 45 point or 28.45 mark, then we may see a good run here up to 28.84. Um, you know, not much, but it's something. Um, and Apple continue. It is down pre-market, but it does continue to rebound from the early sell-off when Meta started talking about them, and throwing a lot of shade on them, and and them also sneakily downloading Starlink on your phone. But anyways, so if we'll look at the momentum ETF. As you can see, it is still down. These are your momentum stocks. All the stuff that's been running. It is down pre-market as well. Hims is down pre-market to $40, all the way down from 72 in the last since the 19th of February. So that's a pretty significant slide. Big Bear is also down. But I believe in these AI stocks, especially quantum computing. So especially with the price on this stock, just have you a buy plan. Just say you want to buy 100 shares, just buy 10 every week or something like that. Because it's going to be volatile, but in the long run, it's going to pay off. You got AST. These are just some things that are on deck. Circle here. Let me see something's running. You got PayPal. PayPal is down right now, but I believe in PayPal. Actually, it's down from yesterday, but it's up big pre-market. Closed yesterday at 75. Pre-market is at 77. We'll take a look at the. So that's Rocket Labs is 21. A lot of people said once it gets to 20, buy as much as you can. Li Auto, I like getting back in Li Auto. Like it's up to 29. I mean, we should have got back in Li Auto beginning of February when it dipped down here. Rivians, check that out. It's another. It's down pre-market. They have a lot of pressure on them, but I believe in the long run that they're going to be a good competitor with um with Tesla. And, just all of those EV stocks are down because of tariff news and stuff like that. So SMCI, they continue to beat the odds here. Everyone's saying this is going to be delisted a month or two ago. So that's really all I have. New plays. Some of the new plays that in our NDRA, it's finally seen some good growth here. Yesterday it was up 11%. WCT, this is one that a new one that I've been promoting. I haven't promoted it, but it's one that I'm in. I got it at 233. This is a personal stock. I got it at 233 and it's up to 258. It is supposed to run for the next 2 weeks or so, about 30%. So if you're looking for something, these drone stocks, I don't know if you noticed, but drones have been in the news lately. Well, in the nerd news, but I think people have kind of forgot about them for now. But in the next week or so, these stocks are going to run. We've talked about there's been news that the Ukraine war is basically a drone war, and there's this race to build not high function, not stuff that you're racing or doing high quality video, just low functional drones that just have one mission only, is to and that's a suicide mission. Drone wise. So don't ban me or anything, Twitch. But yeah, so you got MOB, RCAT, and UMAC. So I think they're at a good entry point to see a good boost here. And if you see that this one has support here, and it usually bounces and runs off of that. So, man, I know we went over a lot. I want to thank new followers on Twitch and YouTube and most importantly TikTok. Haven't really done much on Instagram, but that will come. Stay tuned for future market updates and insights. That's all I'm here for, is to try to spread knowledge, question and answers. Final thoughts is, protect your neck out here. Is this a temporary dip or is this a long-term shift? So I don't know. So just protect your neck. And make sure you follow, like, subscribe, hit the notification bell on everything. I'm not a financial advisor. It's for entertainment purposes only. Do with it what you may. However you say that. No, that doesn't sound right. But just drop your thoughts in the chat, man. If you have any questions, I'll do my best to try to answer. If I don't know, I'll find somebody that does know. Until next time, peace.